Back to questions in just a second. Just to recap, Apple has indeed introduced two new iPhones, 4.7 inches diagonally across the one screen, 5.5 as well. On the other one, if you want to follow the Apple event, we have live streaming coverage at BNN.ca with Michael Hainsworth and Amber Canwar. You can maybe watch both at the same time as we keep going here with Market Call. We have Kevin, who's in Peterborough. Hi, Kevin. Hi, Kevin. Go ahead.
Yeah, Gibson Energy. I'm just wondering, I'm kind of interested in it, or should I be, or should I not be? And if so, would you get in at this price? I'll hang up and listen to you. Thank you very much.
Sure. So, Kevin, again, this is much like the discussion around Keyera. This is a beneficiary of the boom in oil and gas production. And they have all kinds of different operations in water treatment and disposal and oil field waste management. Of course, marketing and distribution, crude oil. These guys are integrated through the industry as far as infrastructure goes. And they will continue to benefit through the cash flow growth that others in this industry have seen. So I think that this is something you certainly can hold. The risk to any of these is that there's a very substantial pullback in the price of crude that would slow the growth in production. We don't see that. I think that you certainly are going to see a little bit of weakness through the fall in crude, and we'll see how that goes. But this is not terribly exposed to the price of oil. So, pays a 3.3% yield. I think you'll see that grow at 5 or 6% a year going forward. I think that's very attractive to a lot of investors when they consider their alternative at a 2.5% 10-year government bond or 2% Canadian government bond. So this is something that I would buy. And, could you see a 5% pullback? Absolutely. But I think if you're looking at this over the next 3-4 years, I think it looks very attractive.
We will stick with energy and specifically infrastructure. Here's a call from Noreen, who's in Pontypool, Ontario. Hi, Noreen.
Good afternoon, gentlemen. I enjoy your show greatly.
Great, thank you.
My question today is on Shawcor, and I have a TSFA, and I was wondering if this is a worthwhile stock to be putting into my TSFA. Right. I'll hang up and listen to you. Thank you kindly.
Well, Noreen, this again is a play on continued build out in infrastructure. And I think Shawcor is certainly something that you can look at. They're, providing a product into the build out of infrastructure. So again, it can pull back, but I think that it has a very attractive long-term theme in it, and we don't see any change in that theme. So I'd consider buying the stock. We own it in our portfolios currently. Okay, very good. There's a Shawcor up by over 1% today. Let's get into technology. Jane's in Richmond Hill. Hi, Jane.
Oh, hi. My question is on Twitter. I know that a lot of the guests in the show are wary of this stock. I want to get Mr. Burrows' opinion. Thank you. So, Jane, we have been investors in this theme in social media. We are shareholders in Facebook in particular. We also own ETFs that hold a basket of these. And, Twitter has a real opportunity to monetize the traffic that they have. And I think that all the evidence would point towards the fact that they're going to do that. This is going to be a higher volatility stock, just like Facebook. You could go and buy an ETF that holds these, or which you get you a basket approach. Or
that's the SOCL.
You could own the SOCL, and we own that. But I think that Twitter has a pretty good opportunity, and I think there's two types of securities that will trade at a premium in this market. One type of security are those we talked about earlier, those with an improving ability to pay that serve a purpose as income replacement for investors who are moving from the fixed income world. The second group of stocks that will trade at a premium are those that have built-in growth with a secular theme that are not dependent on a booming economy. And I think Twitter fits into this bucket. There's a lot of growth-oriented investors, and this is a name that they have to really look at. Again, numbers are getting better. They beat the estimate recently, handily. Share price is behaving as it should be. It's in a sector people care about. It's got a lot of tailwinds.
Certain types of biotech stocks that you've been keen on. Here's one of them, I believe. Dorothy is in Hamilton. Go ahead.
Hello. When you were on in May, David, one of your top picks was Gilead Sciences, and I purchased that stock, and I've been extremely happy with the performance. But in light of the recent news of a generic drug for hepatitis C coming on stream, and also selling the drug at a discounted price in third world countries, would you recommend continuing to hold this company?
Great.
Thank
so,
you.
So Dorothy, you're right. This is one of Gilead's big products, Hep C, and there is competition in the space. They have pretty dominant products. When I go back to how we look at things, we like the U.S. stock market. Within the U.S. stock market, the sectors that are being revalued versus others, where there's some change taking place, biotech certainly fits in there. Actually, all of healthcare does. Biotech is interesting because the very large biotech stocks have a much greater growth rate than the ethical drug companies, yet they trade at multiples that are very similar. So in the spring, there was a sell-off in biotech, which was probably driven by the small cap stocks. But caught within the ETFs that people were trading were these big caps like Biogenetic and Gilead Sciences. And our suggestion was buy those leaders because they pulled back more than they should. They still were holding trend. And so I would continue to buy Gilead. I think that we're going to continue to see consolidation, pharmaceutical companies buying biotech. And so this one I would buy today.
All right, David, we're going to come back with your past picks after this. You made them last August, and one of them is a real doozy, and they're all up. So we'll come back to find out what those are after this.